please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, so those are the visuals. Of course, we'll have the conversation starting in a bit. IT, by the way, is leading a bit of a recovery for the market. IT as in TCS. ITC as well is doing well, but TCS right now is at the high point, and there's quite a bit of buying that you're now seeing in TCS that is trying to take markets slightly off the low point. As you can see over there. But Bajaj Auto will come out with numbers today. Sonia, what are the expectations?
Yes, and you know, the stock is doing very well because sales numbers were very good for the month of January, but earnings are also expected to be strong this time. A revenue growth of 24%, a profit growth of 15%. Volumes have been very healthy for Bajaj Auto this quarter, about 17% growth. This is because exports and three-wheelers have done very well. So, you know, a lot of the export markets like Africa, etc. are picking up. However, that has been offset by a huge weakness in the domestic motorcycle market because Avenger, the V, the Dominar have not done as well as what the street was estimating. So the stock is doing well. Expect good numbers.
Okay. And with that, let's cut into that big event that we've been waiting for. Industrialists to question the finance minister. The event has started and we are taking you to the open house with the finance minister.
And indeed respect. It's a landmark budget. It's a complete budget. It's a budget which addresses all stakeholders in society. It's a reflection of the NDA government's resolve to be inclusive and furthers their thrust on ease of living. There are too many good features to be listed, but it's a different kind of a budget. And
okay, there are still preliminaries. The finance minister will talk in like about 5 minutes, I would assume. So we will cut to that. For the moment, we are more interested in what the budget has done to specific stocks. We never discussed that. Nimesh has made a list of all those customs duty changes and the stocks that should be on our radar. Nimesh.
Yes, Lata. So, you know, there are some major sectors which are going to get impacted because of this budget announcements. So the first and foremost is oil and gas space. You know, last year the budgeted subsidy was 25,000 crores. That remains unchanged, given the fact that the crude has rallied from $50 to $70. So there is a lot of brokerages have put out notes suggesting that maybe this will have an impact on the likes of ONGC and IOC if they have to bear the burden of higher excise. So that's the space which is going to be in focus till there is clarity on how the numbers are going to match if the crude remains above that $70 mark. So that's one. On the insurance side, all the life insurance stocks were rallying today. Were rallying yesterday on that hope that because there were two reasons to it. One, they are not included in that corporate tax category, so that is a good news. So no bad news is good news. And also the fact that with LTCG, while there is no tax on ULIPs, the flow may shift from mutual funds to ULIPs, and that probably will mean higher businesses for insurance companies.
Okay, Nimesh, I'm sorry, I have to interrupt you. We have to cut across to Arun Jaitley now.
I've spoken, many others have spoken. I can only say this, that what you mentioned, that the difference this year was that normally in budget making we tend to fall into a temptation that are there segments, regions, states, social groups which you really need to address, or do you look at the country as a whole and then decide on merits which are the areas which you have to prioritize? I've always believed that there are large sections of the Indian economy which will always do well with or without a government. And probably if the governments didn't intervene too much, and that's been our experience post-liberalization, they'll perhaps will do better. But there are segments of the economy which need a very large amount of government support. And therefore, while preparing for the budget this year, this was the basic philosophy which we kept in mind. Our services sector is doing reasonably well. Of late, our manufacturing sector in the last 1 or 2 quarters has picked up, demand has picked up. We need to continue to spend on infrastructure. So we kept that priority right in front of us. And in addition, we need to concentrate on rural India. And now if you look at the big picture of what's happening in rural India across the last 7-8 years, that's an area where there is a lot of stress, where support is required. So both in terms of rural infrastructure and support to agriculture has been a priority as far as governmental systems are concerned. So you have each village being connected by a Pakka road. That's a program which is almost getting fulfilled now. So you have the 3rd phase of it now starting. In the last few years, we've almost tripled the investment in rural roads between the center and the states. We are spending more on the rural housing, a very ambitious program which we have taken. Most villages have got electrified, and now we are concentrating on targeting individual homes in villages. So these 4 crore homes in villages. 36% sanitation has jumped to 76% between 2014 October and now. And that's a huge jump in India. So you're looking at sanitation in those areas. And this year you have a plan for 2 crore more toilets in rural India. And that is where even besides government, a lot of philanthropic and CSR funds are getting into the system. Then you are looking at providing them the interest subventions. You are providing them a lot of money for irrigation between the central and the state governments. For the rural employment scheme, the amounts have moved up in the range of 55,000 crores, and now it appears that we end up actually spending more than what we provide for in the budget for these schemes. Now these are different methodologies of putting monies into the rural areas, and therefore I think most of the poor being there, the healthcare scheme that we have envisaged, besides a section of the urban poor, is substantially addressed to those areas itself. And if I do hope it's implemented successfully, you target the weakest 10 crore families, almost 40% of India. I think that is where the resource really has to be put in. And therefore this was obviously one great priority area. And of course, coupled with it is the whole scheme on agriculture, where you intend by different methodologies to improve upon radically the farmer incomes itself. Now these were the areas which have been chosen for prioritizing itself. Even on the taxation policy, the space available is very little. And the space is very little because even though we are trying to expand the tax net, compliance levels in India are still not very high. And therefore, within that space available, which are the segments to whom you can give some relief, which have been very carefully chosen. So we've been gradually stepping up in that direction. In the course of the interaction, I'll explain it further if necessary. And of course, this was a tough call which was pending for a few years now on the long-term capital gains. Whether you allow this very important segment to remain untaxed completely. And we thought this was the most appropriate moment where we could afford to tax it, and therefore we decided to tax them at this stage. So really the philosophy behind the budget was to lend support to sectors where actually support is required. And I see now it started in a disjointed manner, but you can see some connectivity or connection between different steps taken by governments, where some social security set up in India is now beginning to take shape. And of course, it has its cost involved, and those who can pay the cost will have to share as a small part of that cost itself. That's all I had to say in the opening. I think.
Thank you, sir. Thank you very much. I'm going to now throw it open. I'm going to request Arnab Goswami to ask the first question.
Mr. Jaitley, congratulations on a fantastic budget, which yesterday was described by many people as being popular while not being populist. It's very comprehensive and has been appreciated by all. We would like to ask you a little bit about the details of the two big schemes. First, on the health insurance scheme, which is path-breaking, impacting potentially 500 million people. 3 questions specific to it. When is the date of implementation that you have in mind? 2, have you allocated a specific corpus to it? Some criticism from the opposition parties that has not been thought out about. And the principal economic advisor said yesterday on the program that some money has been allocated and some more will be done in the future. And thirdly, very critically, people watching this would want to know, is this an insurance scheme or reimbursement? Or a mix of both?
You see, the scheme was originally envisaged in the Niti Aayog itself. And you have an expert in public health who's a member of the Niti Aayog, a top medical professional himself, who after detailed consultation, having spent a lifetime in this area, had come up with this idea. And I have no hesitation in sharing this fact that originally the presentation he made to me and separately to the Prime Minister was for a universal healthcare scheme. And they envisaged that it's about time that India started thinking in terms of a universal healthcare scheme. At that stage we felt that perhaps we were unsure of the cost involved and the magnitude of the scheme, and therefore let us start it on a more achievable basis. That is, we address 10 crore out of the 25 crore families. Now, it takes care of, as I mentioned in my budget speech, the hospitalization, the secondary and the tertiary care. Obviously, it will involve various state hospitals. It will also involve selected private hospitals. It can be on a trust model, it can be on an insurance model. It is not on a reimbursement model because there are too many complaints which come on the reimbursement model. This model between Niti Aayog and the Health Ministry will now be worked out. The date of implementation will be in the next financial year. That is the year commencing from the 1st of April 2018 itself. So sometime in the course of the year it will be rolled out. And I have said in my speech that this year, just to start off initially, when you start these schemes, you earmark a certain amount of money, and then whatever funds are required as the scheme rolls over is made available. It will be entirely state funded, and we've already provided 2,000 crores. But what will be the, let us say, assume it's an insurance scheme. One of the factors is that when you have large number of people, the premium itself, the per capita premium shrinks. And therefore, whether it is X amount over and above 2,000 crores, I've said that in my budget speech, would also be made available in the course of the year. In the coming year, I see a more comfortable situation as far as revenues are concerned, because the graph as far as direct taxes are concerned, as a result of the series of the steps which we've taken, I think has moved very fast. In the budget speech, I had said that normally the tax buoyancy in direct taxes has been 1.1. That is, if the economy, if the nominal GDP grows by 10%, your taxes grow by 11%. But in the last 2 years, post-demonetization, and as a result of the GST, it's been almost 1.9 and 2.1. That's been the direct tax buoyancy. The number of direct tax assessees itself has gone up. And also in the first year, you obviously had hiccups. We haven't been able to put all the anti-evasion measures in place as far as the GST is concerned. So far, it's only a voluntary compliance. And India is not the best place for voluntary compliances so far. And therefore, once the anti-evasion measures are put into place, I do expect a little bump up in the GST collections also. So I don't see revenues going to be such a major challenge in that.
Can I shift to Shireen Bhan?
Thank you very much, sir. Good morning, Mr. Jaitley. I have two questions, sir, if I may. The first question is to do with the announcement made on the MSP, sir. The Vice Chairman of the Niti Aayog seemed to suggest that there are 3 models or alternatives that will be deliberated upon with the state government, and that process itself should take about 3 months. So what's the expectation of when the new MSP regime can be implemented? Are we talking about another 6 months, sir? And my second question on customs duty, perhaps this has gone unnoticed largely. We've seen about 50 items where customs duties have been hiked and hiked quite substantially. Now, I'm given to understand that it's not such a significant boost on the revenue front, but this is ostensibly for Make in India. Are we to understand then, sir, that for Make in India, tariff restrictions will be the preferred option that the government will pursue?
See, as far as your first question is concerned, let's be clear. I think it's a difficult choice to make, because an analyst would also say that MSP could have some impact as far as food prices are concerned. But then when one sees the balancing act, the stress in the farm sector is real. And therefore, if we are to boost up, both from the point of view of the economy as also the requirements of the agriculturists, and also rural demand, which in turn will impact upon the economy, I think a call had to be taken that the MSP really had to be reasonable. And there is an aspiration of the farming community, particularly after Dr. Swaminathan's report for a couple of years, that you will have to give an amount over and above the cost which is incurred. Now the exact formulations, again I said this will be between the Agriculture Ministry, Niti Aayog and the state governments will work it out, but from the coming agricultural season, the effort is to put it into place in the coming agricultural harvesting season itself, so that we don't wait any indefinitely as far as this is concerned. Now, as far as customs duties is concerned, the trend over the last 2 decades really has been to bring them down. And that's the trend. And I mentioned this, that this year I am consciously deviating from that trend only in regard to a few commodities. And these are those commodities in which domestic manufacture in India has commenced. It's taking place in India. And at the same time, you have also a danger of a surge of cheaper imports coming into the country, which will absolutely kill the Make in India. And these are not items of rocket science. These could be television sets, parts, automobile parts, mobile telephones. Now, 5 years ago, mobile telephones were not manufactured in India. Today, you have over 100 plants in India. And therefore, you need to protect domestic manufacturing. And therefore, this has really been done, and I've been candid in the budget speech to say that this has been done really to make sure that the domestic manufacturing in these areas is protected, because in a country population like India, you need to protect local jobs as far as domestic manufacturing is concerned.
Kalipuri.
Good morning, sir. Sir, your budget speech started off by saying that you will reward the honest taxpayer. But I think somewhere along the line, the middle class is feeling quite disappointed by this budget. They're asking what is it in it for them, if there's been no change in the income tax slab, etc. What would you like to say to them?
Well, let me tell you, India has a serious challenge in terms of compliances. India has a serious challenge in terms of increasing the tax base. And therefore, if you analyze the sum total of my last 4 or 5 budgets that I have presented, systematically to the smaller taxpayer, I have given relief almost in every budget as far as the country is concerned. And if I start counting to you, and this is for the honest taxpayer, when I took over, the limit was 2 lakh rupees, the exemption limit. I made it 3 lakhs. 2 years later, I said, for the next 50,000, you don't pay any tax. So effectively for the small one, from 2.5, I made it 3 lakhs. Thereafter, I immediately gave them an additional exemption of 50,000 rupees more for savings. 1 lakh became 1.5. I gave them another exemption of 50,000 rupees for housing loan repayments. 1.5 became 2 lakhs. Then to the entire body of professionals, all your doctors, lawyers, all the middle class taxpayers in that category, up to an income of 50 lakh rupees, I said don't maintain any books of accounts. What you earn, 50% will be taken as expenses, 50 will be taken as income, pay tax on it. This was a presumptive income scheme. Then for the traders and business people, up to 2 crore turnover, again small people, I said if you can't maintain books, 6% will be taken as your presumptive income. Just pay tax on this. For the small taxpayer, in order to get him into the tax net, last year, up to 5 lakhs, I reduced the slab from 10% to 5%. The 5% slab exists only in one country in the world, that is India. It's the lowest tax slab in the world. For the trading community, up to 1.5 crore turnover in the GST, we said just pay 1% of turnover composition. I am actually surprised at the inadequate amount of information behind that question. That where you have a 5% slab in direct tax and a 1% slab in indirect tax, and the question is, how much less can you make it? Do I reduce the size of the army because I can't afford to maintain it? Do we not set up hospitals or healthcare? You can't get slabs lower than this anywhere in the world. And systematically for the smaller body of taxpayers, this is how we've been giving them the kind of tax relief. Today, to reduce the tax base by saying the number of taxpayers are being reduced, you don't serve a larger national interest. You serve it by ensuring that people come within the tax net, but the smaller body is given concessions in various ways so that they have to pay more. For instance, take this year's budget. The entire category of senior citizens, by one methodology or the other, I have given them a relief. 2 years ago, the transport allowance used to be 800 rupees deduction. I doubled it to 1600. This time I've said, okay, you get a 40,000 clear deduction. Now, these are different methodologies to the smaller taxpayers, those who earn 50, 60, 70,000 rupees a month. It is that category to whom you strengthen and put more monies in their pocket by these indirect methodologies. It's not necessary that you change the slabs if you want to help them.
I'll shift to the immediate past president of FICCI, Mr. Harsh Neotia.
Sir, one very interesting feature in your budget was the focus on tourism. And tourism, as we all know, can be a game changer in terms of job creation as well as economy. The point, sir, you mentioned there was creating 10 circuits in the country, and that is really very significant. Could you elaborate a little bit on how we're going to choose these circuits and how this will be done?
Well, I think the tourism ministry would work out the details of this, but it's quite obvious that a very large part of tourism in India actually also relates to culture, to history, to religion, and therefore from Amritsar to Ajmer Sharif to Tirupati, actually bulk of your tourists get centered around here. Tourism then of course also can take place as far as the beaches and other places are concerned. The Buddhist circuit is there. And I think the tourism ministry would decide appropriately what the most appropriate circuits would be. I've seen the figures in the last few months. The increase has been somewhat encouraging as far as the number of inflow tourists is concerned into the country.
The president of CII, Shobna Kamineni.
Good morning, sir. I, along with my colleagues at CII, watched your budget speech yesterday, and as it unfolded, I was holding my breath waiting for you to give loan waivers or more subsidies, and it was quite brilliant that you refrained from that, as many have done in a last budget of almost an election year, a last full budget. And what you did instead was, I think, trying to teach people how to fish rather than giving them fish. So, and that was in itself, when you took the agriculture, so we really compliment you for that you took the most distressed sectors you spoke about. We understand the agricultural distress because a lot of us, our livelihoods are also tied in some form or shape, as India is, with 64% of the population there. And from that, you actually took it into the two worst areas. One is the crop distress and the other one is healthcare for them. These are the two single reasons that really, make their lives and their living so much harder. So this ease of living came from that. Great compliments on that. And also, you refrain from giving these big bang infrastructure ideas because there's so much in our kitty that we still have to do. When you spoke about Bharatmala, Sagarmala, and so much in terms of education. So industry really appreciates that. And just before, as a pre-budget, I was asked by the press, so what's your bet on corporate tax with this? So I said, industry are not betting people. We're risk takers, but we don't place bets. But we were all hoping that this 25% will happen. So it depends on which side of the table I'm sitting, that you did do a lot for the 99% of, and especially CII members, large amount of CII members. But I'm not sure how this room is feeling. So that's one. But the real question is, I think that Make in India is very important to India. And then the headwinds of the world, which is growing at this pace, including the US, they do have competitive corporate tax rates. We need to open up more in terms of our export. Have we done enough in this budget to address the tailwinds which are there for India to be a part of the world? That's my question.
Well, I think to take the clue from your last 2 points, first the corporate tax rates. In fact, I had first mooted this idea that corporate tax rate should be 25%. And this is no concession of favor to industry that I was showing. But the idea really was that Indian businesses must have an investable surplus so that they are able to invest more and create more jobs. Also, international investors look at tax rates when they choose a destination for investment itself. And today, world over, the corporate tax rates are gradually coming down, and therefore India has to be competitive. Now, I had put a caveat that this would be along with the exemptions being phased out. Now, exemptions in India, and this is a hard reality, all have a sunset clause. And if I start withdrawing those exemptions, I probably would be guilty of a retrospective action, because people have set up industry on the basis of those exemptions, knowing fully well that for 5 years or 10 years the exemption is going to continue, and therefore to revoke in advance may not be a fair proposition. So as the sunset date approaches, I think the exemptions will see the end of the day. And therefore it will be possible for me to implement this in a greater measure. But to walk the talk itself, I took the first step last year by saying everybody up to a 50 crore turnover. This year I said everybody up to 250 crore turnover. And the figure 250 crore was chosen because that's the new medium-scale industry limit. And now you have 7,000 companies above the 250 crore limit left, which are still in the 30% bracket. But we've done a back-of-the-envelope calculation. These 7,000 companies which are above the 25% bracket use those exemptions and actually pay only 22%. And therefore, they are probably happier off in the present regime than they would be if the exemptions were phased out and they had to pay 25%. Their effective rate would move up by 2 or 3% itself. But that's inevitable, which is bound to happen.
Okay, we're just cutting out for a bit because the market is collapsing in the mid-cap space at 2.5% lower. I spoke about the possibility of this on PC Jeweler because, you know, we've seen this 3 or 4 days running fall in Vakrangi, and now, you know, you're seeing that 40% lower on the stock, 40-45% lower, and that's not alone now. Just Dial is down about 11%. Jet Airways is now approaching a 7% cut. A lot of these names where you had seen a lot of build-up of positions, clearly there is unwinding. So, of course, there's this angle as well that, you know, now you got 31st January's high as sort of the date. So, you know, there are a lot of people who would want to sell as well and then buy back. So that could also be happening. But the issue on a couple of mid-caps clearly is startling the way some of these stocks have fallen, like PC Jeweler now down about 42%.
Oh yes, questionable mid-caps, you know, when you see them fall about 30-40%, it's fine. But what about some of these non-index large caps that are falling? You know, Jet Airways, yes, Equitas, Cummins. For longer-term investors, of course, at some point, these would be great buying opportunities. But the question is, when does that point come?
Yes, you know, if you're an investor, maybe some of these you may want to dip 10%. But look, the point I made in the morning as well, Sonia, on these days, you want to see if the low of the day is being, you know, respected or not. Otherwise, you know, you are in for a trend day. And it's a trending downward day for now. And this slow fall is actually worse for the market. You know, if you have straight away one downtake where the market, you know, hits circuit or something, that's a strong word. But if you know, if you see a big downtake, markets normally absorb, you know, recover from that. But even if you have this slow poison sort of being taken out, look at the intraday charts of small cap index, mid cap index, and a lot of these stocks. It's telling you a bit of a story here.
Okay. Well, yeah, there is that. But my salve is that the rupee and the bond markets have not gotten worse off. The rupee is still, the dollar still costs only 64.10, or even it's even cheaper than that. And yeah, it's 64.7. So it's not as if there is too much of hell breaking loose as far as our macros are concerned, and the 10-year bond as well, after going to 7.86, has come down to 7.83. These macros are very important because the Bank Nifty is dancing to these tunes as well. So just keep that in mind. They've not gotten worse. So that's also an indication. Let's get back to, yes, the Finance Minister.
Around tier 1, tier 2 cities. So if you now see geographically where they are located, it's really around the tier 1, tier 2 cities. And I think with this scheme being implemented, the same set of hospitals, the same chains are going to spread geographically into other areas also. And of course, I have announced as far as the central government is concerned, and certainly healthcare is an important responsibility of the state governments. After the 14th Finance Commission and hopefully after the 15th Finance Commission, the state governments which have also flushed with funds will have to set up more hospitals in every district of the country.
Mr. Harshpati Singhania.
Thank you. Mr. Finance Minister, I think a well thought out budget which has your stamp of fair play, if I may say. But two quick questions. One is now having introduced the long-term capital gains, do you have anything in mind about the STT? The second one, because there is a tax which is there on that. The second one, sir, is regarding an old issue which industry has had about MAT, on the minimum alternative tax. The issue, the genuine problem there is if a company is coming out of losses, it has losses in the past, has lost money, the first year it turns profitable, you still have to pay a tax. Now that causes a genuine problem in terms of cash flow for that company. It is not the issue whether you should pay a tax or not. So these are the two queries I have.
Well, I think I really can't make a comment on what future changes in law will take place as far as taxation is concerned. You see, it won't be fair for me to comment because that will lead to any unnecessary speculation itself. As the taxation structure stands on the finance bill, at the moment is what it stands today.
Mr. Chandrajit Banerjee.
Sir, first of all, congratulations and thank you very much for the budget yesterday. Indeed, far-reaching changes and far-reaching reforms. You've continued what you had committed on your year one. Sir, two quick issues. One, on the what you have done for the farm sector, and we've been talking a lot for quite a while about that demand would really come from the rural sector, and what you have done for the rural sector is extremely critical and important. Having said that, on the MRP side, if you look at what would be a resultant of the MRP and with the oil prices pressures, what's your view and take on the inflation that you would expect in times to come? I'm saying this because we have really not had much of joy from any announcements from the RBI in the recent past. And the second area, second issue has been on your performance on disinvestment last year was so good. You exceeded targets, and because you've done it so well, and the expectations were very high. Could it have been a little higher target set for the disinvestment than what you have done in the budget?
See, as far as I've seen the data in the last 2-3 months, as far as inflation is concerned, I think India's got out of that high inflation era, and therefore the 4% which has been statutorily fixed plus minus, I think is a reasonable figure. It's achievable, and bulk of last year we've been well within 4. We are just marginally above 4 at the moment. And I think amongst the factors which contributed to exceeding that 4% recently was the oil prices. It was a surge in some vegetable prices, and the release of the allowances, particularly the HRA after the 7th Pay Commission. I think that was a one-off event. The third is over. And therefore, as far as the oil prices are concerned, it's certainly a matter of concern because we are net buyers of oil, and therefore the international prices do impact us. As long as those prices remain within a range, I think it's bearable. Today we are almost, as I have been saying, almost close to the outer periphery of that range. I do hope it doesn't burst through that scene, because then it, of course, has its own impact. On disinvestment, I think last year was a remarkable figure. And to touch a figure like 1 lakh crores, and I think itself is remarkable. You see, the HPCL acquisition by ONGC was announced in the budget last year. It was a kind of an acquisition of downstream by upstream and so on. It was a part of that combination which was announced last year. It's not some last-minute financial re-engineering that we've done on the eve of the budget, because this was a budget announcement made as a part of the oil company restructuring last year itself. I had announced in the budget. And even without that, we've done fairly well. And I think 80,000 crores that I fixed for the coming year is fairly achievable. I think what we also have to look forward besides divestment is going to be the fact that there will be this mega merger I have announced of the 3 general insurance companies, because with the crop insurance, with all other social security measures setting in, and hopefully with the health insurance setting in, India will need large general insurance companies. You have others coming up in the private sector. The state sector companies also need to be big. And therefore, if not as big as the LIC, you need a mega general insurance company in India to handle all this.
Can I shift back to Arnav?
My question is that you